In his much anticipated and much awaited weekly newsletter, Chris Wood of Jefferies makes quite a few interesting and quite a few important cases. He's quite optimistic given the fact that the COVID case count continues to decline in America and also globally. He believes that as far as some of the other key trends that he is tracking, he believes that it is quite positive that in terms of some of the economic activity indicators, especially the hot housing market, is something that is giving him quite a bit of positive cheer. He also believed that there is quite a case as far as oil prices to continue to rise quite significantly, especially relative to gold. But he is not yet turning bearish as far as gold as well as gold view is concerned. He believes that given the fact that the long-term gold bull run is still impact, he would not be a seller as far as gold is concerned. He believes that in this particular deflation environment, quite surprisingly, he states that it's of the opinion that Japanese markets are now proving to be quite a bit of a safe hedge as far as the entire markets are concerned, or as far as entire equity markets are concerned. What he is also saying is that when it comes to inflation, he would be closely tracking the Jackson Hole Symposium for any further traction or any further developments that would be coming in from that particular symposium. He also believes that when it comes to oil prices and oil demand, he's actually talking about how the fall in oil demand hasn't been to the extent to which it was earlier feared that it would be. So overall, what he is saying is that oil prices have seen quite a bit of a recovery. In fact, he also speaks about a few Chinese economic indicators, and where he is saying that there has been almost a 26% year-on-year rise as far as Chinese imports are concerned. What he's also saying is that in terms of gold, his conclusion, or the Greed and Fear's conclusion, is that while there is clearly a risk of further sell-off in gold tactically, he would not recommend selling gold because of the strength of the long-term story and because of the continuing dovish chatter emanating from Pivot and his colleagues. So what he is saying is he believes that as far as any hedge to gold is concerned, he would suggest owning Japanese equities, and that he believes could continue to do quite well. He believes Japan could do significantly better on the back of the fact that they could see increased foreign inflows. The other important phenomenon that he speaks about is the ESG phenomenon. He believes that now ESG, when you're talking about environmental, social, conscious investments, he believes that it is no longer just a couple of pictures strung together, but he believes that there would be a lot of data being collected, and the use of data will actually change the ESG landscape. He believes that there would be a coming deluge of environmental, social and governance data, and this he believes will also become an important criteria as far as stock selection is concerned. And overall, he's quite bullish, and that particular theme reflects across his entire